Hi, today I'm going to give a brief overview of the mortgage industry. The mortgage industry consists of people doing home loans. There's many different types of home loans. There's first mortgages, second mortgages, home equity lines of credit. Mostly we're going to focus in training on first mortgages. I'm also going to let you know that a home loan can be either a purchase or a refinance. A purchase is someone who doesn't own a property and they're going to purchase it or buy the property. A refinance is someone who already owns it and for one reason or another has to refinance the loan that's currently on the property. It could be because they want to lower the rate, they want to pull cash out. Maybe there's two people on title and they're getting divorced and one of them needs to get off of the mortgage. So we're refinancing just to get it into one of their names for the mortgage. There's many different reasons for a refinance, but a refinance is someone who already owns the property. A purchase is somebody who's purchasing the property. Now I'm going to go over a brief overview of some of the positions in a mortgage company and what they do. The loan officer's primary responsibility and the most difficult part of a loan officer's job is to actually go out and get the business. That's bring business into the company. Sometimes it's different if you're sitting in a bank, the clients come to you, but for a mortgage bank, most of the time you're going to be going out and getting the business. The loan officer's job is to properly pre-qualify the client for the right loan type, make sure they're actually qualified before they go out and look for a house, give the realtor a pre-qualification letter, help the customer choose the right loan program, collect all of the initial documentation to make sure that they do qualify, and then turn in a complete file to the processor. A complete file means taking a complete loan application where you pay close attention to job history, residence history, and where the down payment and closing costs are coming from. Those are the three most important parts of taking the loan application. The loan officer assistant, for loan officers who have assistants, the loan officer assistant is going to help take loan applications, and they are going to make sure they can take a complete application, making sure to get the job history, 2-year job history, 24-month residence history, and find out where all of the money for the prepaids and closing costs are coming from and where that money has been for the last 60 days. They also help the loan officer with following up with customers who are pre-approved looking for houses, maybe follow up with customers who almost qualified but have to work on their credit a little bit. So staying in touch with the loan officer and helping get that file ready to turn into processing is all part of the loan officer assistant's job. Loan officer assistant's jobs can vary by the loan officer and the manager. Sometimes the loan officer assistant also follows the loan all the way through the process to help make sure it closes in a speedy manner and helps out anytime they need to in getting the loan to closing. The loan processor is the one who takes all of the paperwork once the property is in contract on a purchase. If they're in contract, they turn it into the processor. The processor orders the appraisal, the title work, and gets all of the documentation, verifications of employment, verifications of rent, anything that's needed for the loan to go to the underwriter. The processor gets all of that information. One of the most important things for the processor to remember is sometimes it's just as important what you don't give underwriting is what you do give underwriting. So that's important to remember. The underwriter is the one who reviews the entire file, makes sure it fits all the parameters of the loan program it was submitted under, and then approves the file, usually with conditions. The processor then helps fill all of the conditions and gets the loan to the closer. The closer draws the loan documents, prepares the closing disclosure, and gets the file to the title company. The title company then will close it. Some states are different. Some states have attorneys close it. Some states have title companies. In Oklahoma, we have title companies close it most of the time. And in New York, they have attorneys. Other states vary. So that's what the closer does.